along the lines of comparing and contrasting the solo 401k and self-directed IRA options. If you once again Google like some of these differences, something that might come up is an acronym called UBTI. So, can you define that and tell us what this means and basically the implications?
Yes. So UBTI is unrelated business taxable income. And that is, follow along with me. This is a lot of information. I'm going to try and keep it simple. That is essentially income that is generated from unrelated debt financed income. So let's break this down a little bit. If you took retirement funds and you invested in debt financed real estate, that debt financed real estate is going to trigger the UBTI. So now you're running into a situation where, based on the amount of financing with your real estate investment, your gains are going to be taxed according to the amount that's financed. If the real estate project that I brought up a little while ago was partly financed, let's say maybe 30 or 40% of that project was third party financed, a portion of your gains are going to be taxed according to that percentage. So 30 to 40% of your gains could be taxed. And it's because of that debt financing. Now, the unrelated business taxable income is essentially that income that's generated from your investment that will be taxed that I'm referencing. This is very, very common. In fact, you can't necessarily avoid it with a self directed IRA. Okay. Now, do some investors offset that UBTI, if you will, or that taxable income from some of their other losses personally? Sure, they have strategy with their tax advisor to help offset some of that burden because they know going into it that they're going to invest with their self-directed IRA in debt financed real estate. However, let's use that same scenario with the apartment complex renovation. Let's say it's a 3-year project and there's 30% debt financing from the local credit union who took on that opportunity to finance a portion of the project. If I walk into that investment as a limited partner with my solo 401k, there's actually a UDFI exemption. Again, that unrelated debt financed income exception, which means I can invest with my solo 401k in that project, in that hypothetical. My gains are not going to be taxed. It's not going to trigger UBTI. So a lot of folks will gravitate towards the solo 401k and they want it because they know it's going to come along with that UDFI exemption. In fact, there are financial coaches that I know of that really, really endorse the solo 401k and try to like get the word out there about that self-directed retirement account so that people can leverage it. But you do have to be eligible for it, just like you were mentioning, Liz. So you might want it, but you can't have it. Don't get me wrong. There are people that will actually go into self-employed consulting just to have a solo 401k. We've seen it hundreds of times. They have the wherewithal where they can actually take on throughout the year self-employed activities so that they can qualify.
Okay, so to summarize, just to make sure I understand, not everyone can qualify for a solo 401k. You have to be self-employed additionally and have revenue coming in, correct?
Yes.
And it may be easier, sounds like it's easier to avoid the UBTI. However, if you can't qualify for a solo 401k, then you can do a self-directed IRA in which it may be more difficult to avoid UBTI. Is that correct?
You hit it on the head.
Hey there, it's Andrea. If you enjoyed this video, hit subscribe so you never miss another one. Thanks.